Good morning. I'm Peter Milios from the Finance News Network. US stocks retreated on Friday, concluding what has been a tough week for the market. The Dow Jones Industrial Average slid 0.31%, the S&P 500 shed 0.23%, and the Nasdaq Composite slipped 0.09%. Forward ended Friday up 1.9% after a source told CNBC that the auto giant was making progress in negotiations with the striking United Auto Workers Union. Stellantis also traded slightly higher, while General Motors finished lower. LG Chem and Huayu Group are planning to enter the LFP cathode materials business, building facilities in Morocco and Indonesia. The Morocco plant will have an annual capacity of 50,000 metric tonnes, supplying LFP cathode materials primarily to North America. They plan to expand into the LMFP cathode materials and vertically integrate the supply chain in Indonesia. Friday's slide marked the fourth straight day of losses for the three major averages. The losing streak came as investors reacted to a signal from the Federal Reserve that it intended to keep interest rates higher for longer. The S&P 500 and the tech-heavy Nasdaq Composite have dropped 2.9% and 3.6% this week, respectively. That marked the third straight negative week and worst weekly performance since March for each. The blue-chip Dow slid 1.9% on the week. Bond yields surged after the central bank forecasted one more rate hike for 2023. The benchmark 10-year Treasury yield popped to its highest level since 2007 last week. Meanwhile, the two-year rate touched its highest level since 2006. Concern also grew around government shutdown, which could dent consumer confidence and slow down the economy further. House Republican leaders sent the chamber into recess on Thursday. The US dollar has hit its highest level against the euro, the pound and the yen since at least March, after the Federal Reserve set out plans to cut interest rates, now at a 22-year high, much more slowly than economists had thought. Turning to commodities now, JP Morgan recommends focusing on the energy sector, believing it's time to turn bullish on the global energy complex. Despite oil prices surging by 30% since June, energy equities have lagged behind. JP Morgan sees the potential for upside risk, which could push oil prices to $150 a barrel in the near to medium term and $100 a barrel in the long term. Overall, all sectors except for energy and tech closed lower on Friday. Consumer discretionary was the worst performer. The SPY futures are pointing to a 0.3% fall. Thank you for listening.